Hi, this is Drew with Daniels Ag Services with your post-USDA report Wilkins Ag Wire wrap-up. First thing we're going to do, let's take a look at the actual numbers and what they came out with versus what the trade estimates were. So we'll grab our whiteboard in here real quick. So the top row here is what the estimates were. The red is going to be what the USDA actually came out with. Same thing here on the stocks. The top row in the blue is what the estimates were. Bottom row in the red is what we actually got today. So corn planted acres actually came in a little over a million less than what the trade was expecting. Trade was expecting around 92.9 million acres planted. We actually came in at 91.691. So that was seen as a little bullish for corn. Beans, we came in a little higher, not much though. It really kind of came in as expected for beans. And then wheat came in a little lower than what the trade was expecting. As far as March 1 stocks, lower again on corn, so the whole complex was a little bullish price action for the corn market. Beans came in around 3 million bushels higher than expected. So beans really, you could say, came in pretty much exactly what the trade was thinking. That's a really good job on the average trade estimates by the trade there. And then March 1 stocks for wheat, not much difference there from what the trade was expecting either. So really, when you're taking a look at these numbers, beans and wheat were as expected. Not a huge difference between what the average trade estimate was versus what we got. Corn was the only one with the lower planted acres, which some think that's still too low. They think we'll have more corn than this. And then also the quarterly stock still being lower. That's still a lot of corn, but it was lower than the trade expected. So what happened afterwards? Well, corn was trading double digits lower, flipped back, turned higher on the day. Beans higher on the day as well. Front month over 20 cents higher on the day. So really supported based on the fact, even though these numbers weren't bullish at all, the trade had done a really good job hedging themselves or reducing their exposure pre-report. So when the report came out, they look at it, yeah, we're a little bullish corn, but is it that bullish? No. It was pretty much as expected for beans and pretty much as expected for wheat. Well, the report risk, because this is normally a really volatile report, is now done. They can now go back and establish their positions, which are long positions. They did such, therefore sending the market higher. So that's my estimate on why we ended up so much higher in beans today. Not as high. I think we front month in corn were almost 10 cents higher, and wheat was barely higher on the day. But again, once the report was released, we did see some of that chop that we've seen all too often when these reports are released while the market's open. So, but it did settle out, and we finished up higher across the board. The only thing I'm showing red on my board is actually November beans, ended up slightly down on the day. But other than that, that's your wrap up for the USDA quarterly stocks and planted acres report. We will have a table posted on the daily report tomorrow over on Grain Analyst if you want to look at the numbers. They're all right there for you, though. You should have a good idea what happened with the USDA's expectations and how the trade reacted after listening to this. So that's all we've got for today, and we will see you tomorrow morning.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.